So today I'm going to talk about how to invest in Forex like Warren Buffett. Alright, so does Warren Buffett invest or trade Forex like us traders out there? Probably not, right? Probably not. However, Warren Buffett is one of the world's greatest, and he's probably the world's greatest investor of all time. So if we could emulate the way he invests in the way we trade Forex, I believe that would escalate and that would increase our winning ratio, our winning probability, or our success in Forex trading by heaps and pounds. So, hi, my name is Ezekiel, so I'm the founder of Forex Mentor. So this video itself, I'm going to talk about Warren Buffett's way of investing and how could we actually use his, in a way, ideas, his rules, his methodology, or the way he thinks into the way we trade Forex. Right? So in my last video on using correlated pairs, I talk about diversifying. Diversifying is one of Warren Buffett's main, or I would say, strong rule in his investment strategy. Right? So Warren Buffett diversifies. So he diversifies, that is without a doubt. So for example, so number one, right? Diversify. So diversifying is where we gotta spread out our risk. That is something which I'll go in depth. So by spreading out our risk, you know, it's whereby, think about this way. If we are going to go to the casino, right? If we're going to go to the casino and we got $1,000 in our pocket ready to gamble, right? What are we going to do when we are in the casino? Are we going to take our $1,000 and put it all in one game and then hopefully we can double that? Or are we going to take the $1,000 and split into maybe 500, and one I'll play blackjack, and another one perhaps I'll play the roulette. So what exactly should I do? How exactly should I plan such that I am diversifying my risk, and hopefully I've created a system when we go to the casino such that at the end of the day, hopefully we get out with some profit, and if not, get out with minimum loss. Right? So that is diversifying. Of course, I'm not a professional gambler. I don't go to the casino to gamble or to play, right? So, but diversifying is highly critical in Forex trading. So in Forex trading, we have many different, I would say, Forex pairs. Right? If we only trade one pair, let's say we only trade one pair. I'm not saying not to trade one pair. A lot of traders trade one pair and they excel at that. And that is great. But for me, my trading style is that, or my rationale is that, how many good trades are there in a single day in one pair? Probably not a lot. Or I usually like to grade my trades into A trades, B trades, C trades, or super A trades, right? So I like to grade them in a way. So how many super A trade setup will there be in one pair in a day? Maybe one, more likely maybe 0 in a day. Some days there's 1, some days there's 2, there will be days that have 0. So if I am only trading one pair, then I am focusing on one pair itself, and if that one pair doesn't have a trade setup day after day after day, will you be tempted to go in to trade B trades or C trades? Probably yes. If not, I don't know, will you? The question is, can you be patient enough to wait day after day after day in search for a super A trade setup, or I would just say a good trade setup that you should enter. So that's the reason why I prefer to look at various Forex pairs. And not only Forex pairs, I look at stocks as well, I look at commodities as well, and I look at various other things. To me, all these are just vehicles to make money. I don't care whether is it a Forex pair, whether is it Euro USD, or whether is it Alibaba stock, or whether is it the S&P 500, or whether is it a cryptocurrency Ethereum. As long as they make money, they are just a vehicle on the trading chart for me to trade. So the way I trade is simple. Therefore, I'm spreading out my risk in search for the best setup over 20 Forex pairs, over commodities, over cryptocurrencies, over stocks. And that is my understanding, and that is my way of trading. By doing such, I am able to really QC, quality check, the best of the best of the best trades, such that I will not feel tempted to enter into B trades or C trades when there is no super A trades. Because by looking at so many pairs, and even if I look at so many pairs, there are days when there are no trades at all. Because that is simply how the market goes. The market will go like maybe perhaps even a week, there is maybe only one or two good trades. But perhaps the next week, there is an influx of awesome trades. So that's the reason why I look at multiple pairs. So diversifying is, apart from looking at multiple pairs, it's also spreading out your risk. So this I've mentioned heavily on my another video, which is using how to trade using correlated pairs, right? So I recommend you to go and watch that video. That is where I go in depth into talking about diversifying. So apart from diversifying, secondly, on how Warren Buffett's methodology is, his number one rule. What is Warren Buffett's number one rule? I'm sure you probably know that. And that is never lose money. That is his number one rule. Never lose money. And his rule number two? What is his rule number two? Remember rule number one. So the focus in this game, in this investment game, is to try not to lose money. You know, traders go the other way when they venture into be it stocks, be it forex trading, or be it trading commodities. What they are focusing on is how much profit can I get from the market, right? Makes sense. But they fail to forget the important rule, which is never to lose money. So by going out and with a lot of greed, with a lot of ambition, by going out and wanting to grab as much profits as possible, during that course, you will likely to increase your risk, or you will likely putting yourself in a stage of risk which you shouldn't have, and by doing such, you will end up, yes, you may make big money, but you may end up losing big money as well. And that is the reason why a lot of people, when they come into forex trading, or they come into stocks, or they come into any other investment vehicle, they lost big amount of money. Because they forget rule number one, which is never lose money. So therefore, I want you to take this approach the next time when you are looking at your trade before you execute your trade. Apart from looking at what is the potential profit that I can make, think about how can I reduce this risk as much as possible? How can I possibly don't lose money? Of course, it's impossible not to lose money in trading. How can I minimize my risk such that my wins can cover my loss, and I'm capping my loss at the minimum level which I can accept, and I know that if I play this game in the long run, the wins, the profits will cover my loss. So focus on the rule of never to lose money, not the other way around. And by understanding the rule of never losing money, and that is the reason why when I trade Forex, I always like to move my stop loss. When I enter the trade, I have an entry point, I have a stop loss point, right? So that I can safeguard my capital. So when the market moves, I would try to quickly minimize my loss, or to cover my loss by putting my stop loss at my entry point right away. This way, I will cover the trade into a free trade. So my methodology or my way of trading is to minimize my losses. When you are able to minimize your losses, that's where you can able to accumulate the wins, and the profits can cover away those small losses that you make. However, if you are aiming for big wins, and then maybe you get big wins, sometimes you get small wins, but you forget to cover your loss, that's when your wins will not be able to cover your loss, and your losses will erode away the wins and more. And that's where most of the traders are screwed, big time. I know this is all in theory, but if you cannot even master the theory behind it, trading is a mental game. A lot of times you know the strategies to trade, but when you trade, it's all a mental game. It's all about your fear. It's all about your greed. So in order to master that, you need to remember this phrase, this rule that Warren Buffett has. Never, never, never lose money. Rule number 2, remember rule number 1. Right? So the third one, it's a part of Warren Buffett's methodology, which is diversifying and which is putting your eggs into different baskets. So I have a way of trading that may not be Warren Buffett's style. Okay, Warren Buffett's style is where he's pretty much a value trader, right? A value investor, or however they want to call him. So what this means is that he looks at stocks that have big potential value, right? Solid companies, solid fundamentals. He invests in them and put it for the long run. So he's more of a long-term trader guy. Yeah? And that is kind of how he is able to amass his wealth, by doing this methodology, because what goes down will come out eventually. What goes down will come out. Right? So that's how, if he invests in solid companies, that's where he's able to make money in the long run. And that is contrary to what a lot of traders or new traders do. They go in with penny stocks. I'm not a stock expert by all means. They go into, I'm a Forex expert, right? I trade Forex. So if somebody goes into trading Forex, they trade 1 minute. Wow, 1 minute. Yes, there will be a lot of people who are good at 1 minute, but if you are brand new in Forex trading and you jump into the 1 minute time frame, I think you are jumping into the waters full of crocodiles. Because inexperience will kill you in the 1 minute. You need a good amount of experience, and by good amount I probably mean years, in order for you to successfully trade 1 minute. Because the 1 minute is way more volatile, the 1 minute has way more trade setups that likely don't work. The higher the time frame, the safer it goes. What goes down will come out eventually, what goes up will go down eventually. It's pretty much stable in the higher time frame in comparison with the lower time frame. So that's the reason why when I trade, I will probably recommend you to perhaps do the same. Yeah? Which is where I have 2 baskets. So basket number 1, okay, basket number 1. This is where I will put my basket 1, right? Basket 1. Longer term trade. And then the second basket, yeah, that is where I will do my daily trades. So it's up to you how much you want to split it up. For example, so what I do is, let's say if your capital is, let's say $10,000, example, you may want to consider putting 50% of 10,000. So if you have a capital of 10,000, I would probably recommend you, right? It's just my way of, throughout my years of trading, I think that this is something that keeps you safe and sound, makes you be able to sleep soundly at night. And because you know overall, it is part of the overall diversifying basket, it's also part of the overall rule, which is trying not to lose money. So you can, if you want, put 50% in a long-term trade and the other 50% in your daily trade. So for example, if your capital is $10,000, perhaps you want to open 2 trading accounts. One trading account $5,000, another trading account $5,000. The $5,000 you will trade a long-term trade, which you can probably trade a weekly and even the daily. So this is where you want to trade for, you're not looking to get in and out. You are a slow, conservative, secure trader like Warren Buffett. How Warren Buffett would trade. He's wise, but he's steady, and he looks at the long run. He don't care the day-to-day fluctuations. He looks at the long run. Of course, our forex trading long run is not as long as Warren Buffett's longer run, maybe 5 years, 10 years. You can if you want, but perhaps our longer term trades could be like weeks, could be months. So you can trade the weekly time frame, which is slow but secure because it's lesser volatility. And usually if you notice the weekly time frame, it goes bar by bar by bar by bar, and it's pretty stable and trending. So perhaps you can put 50% of capital into your longer term trade, which can be your weekly, which can also go to your daily. But I would say let's put it at weekly, okay, or even monthly. But my preference is weekly, right? And then your another 50%, which is another $5,000 of your $10,000 account, you can go on to your daily trades, which could be your daily time frame, your 4-hour time frame, and perhaps your 1-hour time frame. So this is when you get in, you get out day to day, right? So you trade as per what a typical trader would trade, getting in and out day or every other day. So there are definitely more trades here, definitely lesser trades here. But these are the trades that you hold for the longer term. These are trades there where you get in and get out pretty quickly. Let this run it out. Let this run it out. I bet you most of the traders who trade Forex don't do this. They think you're mad. They think I'm mad for me to recommend to trade a long-term trade. Ezekiel, why the heck should I do that when I could easily make great money in the daily trades? In my day-to-day trades, I get in and get out quick. Try it, and let me know your results. Usually, I don't know, you may find that perhaps after maybe half a year, 6 months, you may actually find that you are more profitable in the long-term trade than the short-term trade. You may. And if you found that to be the case, then I'll probably recommend you to up that 50% up higher to more, to maybe 60, 70, I don't know. or maybe to trade the higher time frame, the longer term trade basket altogether. But if you're the kind of trader that, no, I want to trade, I get in and get out, and you know there's some kind of traders who are kind of aggressive, so that's where I will have my third basket. Not that I use, but I will recommend you if you are very aggressive. Basket number 3. Basket number 3 is where traders have that aggressive streak in them. Traders who want to trade every day, they want to get in and they want to get out fast. Sometimes they do silly things where they revenge on the market. Sometimes they increase their risk a lot more than they should because they think that a certain trade is very good, right? So if you are that kind of trader, maybe I want you to try something. Maybe I want to try something. Try in this aggressive basket. In this aggressive basket, maybe instead of, if you have been trading all this while you are very aggressive traders, you are the kind of traders that I talked about just now. Right? Maybe not the extreme, but you know you are the more aggressive traders. Sometimes you risk more than you should on certain trades. That's where I would recommend, if let's say you have 100% of your capital, you put it in this way of trading, I would recommend to slow down a little bit. Maybe you change that. If your capital is 10,000 as an example, maybe put 20% into this basket. Just give it a try. You'll be surprised. 20%, which means that if this will be 20%, maybe you stick this to 50% and this to 30%. Just give it a try. At the end of the day, check your profitability level, maybe perhaps after 6 months. The percent of profits that you make from this capital, and from this capital. I think the end result may surprise you. I think. But perhaps you could be a great aggressive trader, or perhaps you could be a great daily trader. Then you should tune down to this and you tune up to this. So the idea behind it is to find out what suits your trading style. You don't know until you start it. You don't know until you play it. And then a lot of times, I've seen my students, they are very surprised by the results. And this basket tweak alone has made them way more profitable than they would have been. And they would actually say that, why didn't I thought about this earlier on? Because instead of focusing day to day on your day-to-day trades, this overall picture is actually so much more important. So I hope you like this week's video. Alright, so do check out the next few videos that I have. Do click on the like button, do click on the subscribe button, and I'll see you on the next video. So I hope you enjoyed this week's episode. Do leave a comment below and let me know what you think, and it will be really awesome if you hit the thumbs up button. So I release new videos like this every Monday, and if you enjoyed it, do click on the subscribe button so that you will be instantly notified once I release a new episode. See you on the next video.